Okay, so this is for the subject Church Financial Management. This is Chapter 4, Other Revenue Sources. So this is in relation to Chapter 3, Income Contributions. Okay, so other revenue sources that the church may get their funds from. All right. So earlier in the previous chapter, Chapter 3, I forgot to expound on a few uh, subtopics, so I'll try to discuss them. First one is about the tax exemption of churches. Okay, I'm not sure about the other countries, but in the Philippines, churches can apply for tax exemption, meaning the income or the net income, not really. Okay, so the income that they generate or that they receive from contributions will not be subjected to income tax. Okay, so normally churches we have contributions, in the income statement or in the statement of activities. So we have the revenues and then we have the deductions, the expenses. Let's say contribution. Sorry. Let's say missions expense, building expense, and then you have your operating expenses, and then you have the bottom line, which is it could be deficit or excess revenue over expenses. Okay, if it's excess revenue over expenses, meaning you have more revenue than expenses, that amount, that both bottom line, would be subject to income tax. Okay, for corporations, the income tax currently I think is around 30 or 32%. I don't remember. There were changes recently, so it's around that percentage, okay, 30%, or I think it's going to be lowered soon to 25%. But still, that's a large percentage, right? So if the church does not have a tax exemption, then they would have to pay 25% of the bottom line or the net excess of revenue over expenses, right? If it's a deficit, in a deficit, it means the expenses are more than the revenue of the church. So in that sense, normally, the church would have to pay the MIT, or sorry, MCIT, minimum corporate income tax, which is 2% of gross income. So 2% of the revenue minus the direct cost. Direct costs are normally just salaries and wages of the employees. Okay, so to get the MCIT, you'd have to get the revenue, all the contributions, minus the salaries and wages, and then you have the gross amount. That amount, you're going to multiply that by 2% to get the MCIT, minimum corporate income tax. So that is the amount of tax that you're going to have to pay to the BIR if the church is not tax exempted. Okay, because the tax exemption is um, there's an application process. Okay, it's not automatically what do you call it? Not automatically granted to churches. Okay, the churches would have to apply for the tax exemption. Okay, and if they are tax exempted, then they don't have to bother with the MCIT or the income tax on the bottom line, the net excess of revenue over expenses. Okay, if there is a tax exemption, then don't have to bother paying for the taxes. Okay, but if a church is not yet tax exempted, then they would have to pay for those taxes. Okay, here in the Philippines, there are of course list of requirements to apply for tax exemption. One of the requirements is that the church should be operating for at least 3 years. They have to provide the financial statements for the last 3 years. Okay, and then another would be to provide evidence that the how do you call that that the funds are exclusively used for religious activities or in support of the mission and purpose of the church. Okay, they cannot engage in business-like transactions or for-profit transactions. Okay, churches are normally registered as non-profit organizations. Okay, so if they engage in business-like transactions or for-profit transactions, then they might be subjected to taxes as well. Okay, if they do. So again, that might be one reason why certain churches, or especially here in the Philippines, churches do not engage in um, business like business-like transactions because it may result to losing their tax exemption. Okay, so there's that. Another thing I'd like to discuss, donation. Okay, in the donation there must be a transfer of ownership, especially if it's non-cash. Of course, if it's cash, okay, the donor can simply give the cash to the church, and since the cash is already in the hands of the church, it's already theirs. Okay, there's no record to transfer the ownership. But in the case of non-cash, especially real estate, let's say land, building, and then vehicles, okay, these properties are, they have their respective registries, okay. Land and buildings or houses, they're normally registered with registry of deeds, okay. And then for the vehicles, of course, there's registration with LTO. Okay. So if those types of properties would be donated to the church, then there must be a transfer of ownership. Okay. The title to the registration should be transferred to the name of the church. Okay. In a way, it's to protect the church from possible repercussions later on. So for example, the church received a piece of land, right? They must ensure that the ownership is transferred to them so that they would have the right over the property. All rights relating to the property, to use it, to sell it, to use it for whatever purpose, or to give it to someone else. They would have the right to do that if they are the registered owner of the property. Okay, but if the ownership was not transferred to the church, then in a way the church cannot recognize it as a donation to them because for one, the ownership was not given to them, right? It's possible that later on in the future, the person named as the owner of the property might, you know, what do you call that? Take back the property from the church, okay? Especially if there is no legal transfer of ownership to the property, okay? We have this so-called statute of frauds. Statute of frauds, it's what do you call it? It assumes that human memory cannot be relied upon, so certain transactions must be written. Okay, certain transactions between individuals must be documented, and this document must be signed by both parties, and sometimes they must be notarized. Okay, so that later on, if there's a dispute, they can refer to the document saying, hey, in fact, you did give this property to the church. You transferred the ownership to the church, and this is the document to prove it or to evidence that it did happen in the past. Okay, because if the donor later on does not want to realizes that he does not want to give the property to the church, and if there is no transfer of ownership, if there's no documentation, then he can simply deny that he did give it to the church back in the day. Okay, they can simply deny and say that I must have been drunk during that time or something. I've forgotten about it. I don't remember ever giving the church this property. So it's not the church, it's mine. Okay. So to avoid that kind of situation, again, uh, such transactions must be documented. And then notarization, it's a legal record of documents, okay? Um, a written document between two parties, okay, the donor and the donee, um, it would be, what do you call it? It would be accepted as between two parties. The reason why certain documents need to be notarized is that for it to be used against third parties or third persons. Okay, for example, the property was given by the donor to the church, so the church is the donee. So there's a document evidencing that. But then the donor, let's say, sold the property to another person, okay? And then that other person bought the property without knowing that it has already been donated to the church, okay? So a document which is notarized, that's why notary, they do have, what do you call it? The parties have represented their identification. It was dated, the notary is dated, and then the place where it was signed by the parties. And then lawyers who notarize documents, they do have books which list the types of documents that they have notarized. Okay, so it's a record which can be, shown against that third person to say that the donation did in fact happen, and since you bought it at a later date, then the sale between the donor and that person would have no effect because the donation happened much earlier on. Okay, so the right to the property rests now with the church. Okay, so that's just an example. All right. But if it's not notarized, certain documents might be, what do you call that? Forged or fake. Let's say if it's just between the two of them, then they can just write the what do you, the agreement today, currently, and then date it 10 years back or 20 years ago, even if they only uh, wrote the document today. Okay, it's a faking document, so that's why for a document to be used against third parties, it must be notarized because the notary would evidence that it did happen on the day that was stamped on the document. Okay, so that's why notary is important. And then the transfer of ownership. So, with regards to acceptance of donation, the church may have to consider actual transfer of ownership from the donor to the church. And then there's another thing, we call it usufruct. Usufruct is the right to use the property. So, the ownership to the property is not transferred to the church, but there is an agreement written and what do you call it? Added to the title as an addendum, giving the church the right to use the property. Okay, it would be better if the right to use the property is, um, perpetual or for an indefinite period of time, and then also these are clauses, okay, that can be added to the right use of rock, the right to use. Let's say even if the property is sold by the owner, the buyer would have to honor giving the church the right to use the property. Okay, so in a way that is the ideal right to use uh, to be granted to the church. Okay, because if let's say the right to use is only effective with the current owner, that if it's eventually sold to a different person, that other person may revoke the right to use, so that's not good for the church. Okay, so if the church is going to accept a right to use, they might, have to ask, is it going to be perpetual? If the property is sold later on, would it be revoked or would it remain? Okay, the right to use would remain. And the right to use is normally added on the registry of deeds, the title of the property. Oh, another another thing about donations of properties, you have to make sure that the property is free from encumbrance. Okay, let's say the property donated to the church, and then later on you found out that it was mortgaged to a bank or to a financial institution. So if the donor, let's say he has a loan from the bank and he fails to pay the bank can, since the property is used as a collateral or as a security or as a mortgage, the bank or the financial institution can, what do you call that? Take this property to pay off the loan of the donor. So if the church would be faced with that situation, okay, the property is encumbered or there's a mortgage on the property, so the church may not want to accept such a donation. Okay, you want to make sure that the property is free from such encumbrance. It's not being used as a collateral or security on the donor's loan. Okay, and again, you can check it. This can be checked when you transfer the ownership to the property, because mortgages are collateral. They are also added to the title as an addendum, okay? Because the financial institution would want their right to be known against the property. So if it is unencumbered, so no collateral or such encumbrance would appear on the deed, or sorry, on the title of the property, okay, on the registry of deeds. All right, so those are some of the things that I forgot to mention earlier in chapter 3. Okay, so before we start with chapter 4, I'm going to um, stop this video because it's been over 15 minutes already. Okay, and then we start with the real chapter 4. All right, so that's it.